Hello and welcome to the Weekend Investing Daily Bite of 7th October. Another day which investors will not easily forget because there was decent amount of bloodletting that happened on the day today. Market opened weak and stayed weak through the session, especially the small and mid caps which were thrashed quite brutally. Uh, on a sort of a change from the recent past when FIIs were selling, you would see Nifty move down, but not the mid and small caps. Today it was kind of the reverse. Nifty did move down, but small and cap universe was uh, unquestionably in a bad place. FII's headline market meltdown. We'll talk about how FII's selling and buying has influenced the market and how it is looking like in the last few days. Please first subscribe to the channel if you haven't so far. So where is the market headed? The market has been heading last 6 days down, down, down. We've crossed the support uh, average, the SMA 40 that we had. We've also gone below the mid-July top, and we have also become sort of oversold in this process, coming down 1500 points or so in a quite a rapid move. My sense is that we will get some support around here and we may actually make a right shoulder. You are already seeing a left and a left shoulder and a head. We may see a right shoulder and then there may be further bloodletting. That is sort of the uh, pessimistic scenario that I can think of. Otherwise, we may consolidate here for some time and then start another leg up. That is the best case scenario one could look at. Nifty Next 50, which had been, you know, doing better than Nifty so far, today gave up minus 2.33%. So there seems to be a lot of selling that has happened today, not only by foreign funds, but by retail investors as well. And we've lost almost 3 months of gain uh, where we first reached beginning of July on this index. Nifty mid-cap also, no mid-cap was paired today. We've cracked much lower than these pivots and 2% cut on this index coming back to July levels once again. And small caps covered one of the gaps out of the two gaps. There is another gap right here. Um, so the one gap was closed today by a very long candle here. So quite a cut of 2.81% in a single session. We've now gone almost 1,000 points lower from the top. There could be certainly more that can come. Bank Nifty is the one which looks not so good. We've, uh, you know, went up very rapidly and then collapsed back to where we started from. So this entire move, which was based on the fact of the expectation that Indian rates will also benefit from overseas falling rates, and the fact that bond books on the books of Indian banks will help the banks. That theory seems to have fizzled out. The rate cut scenario in the US itself seems to be fizzling out, with more and more commentators saying that there will be no further rate cuts because the jobs data last week was very good, and hence the Fed is in no position to cut more and add to the inflation. Rather, they would wait. So that speculation has also helped the bears a bit. Of course, there are other uh, stories playing out, whether it is the war at Israel and Iran, or the movement of FII money towards the Chinese markets. All those are additionally causing, uh, you can say, a mental sort of situation where uh, everybody almost is sort of convinced that there is no way up. Um, so the market is kind of falling under its own weight. There is not much of enthusiasm for the upside anymore. And there will come a point where, the demand that was sitting on the sideline will come in and try another round up. That I think could happen sometime later this week, perhaps. The results for the previous quarter, they will also start trickling in the next week or two. And as per several estimates, they are not likely to surprise on the higher side. The political situation also has been quite grim. Tomorrow is the outcome of the Haryana polls. It is likely that the current dispensation will get booted out, and the next elections in Maharashtra are also not looking so good from their perspective. And market is making its adjustments that after these couple of bad shows, will the fringe elements again sort of try to take center stage, or the government's sort of strength to stay uh, uh, with their numbers remains as strong or not post these few elections. So all that is getting sort of built into the system, perhaps, and that's the reason for significant fall that we are seeing. Reasons could be, as I mentioned, we can ascribe as many reasons, but nobody really knows. I mean, we have to follow the trend that is going on, and the trend is extremely negative right now. 445 declines and only 54 advances in the top 500 stocks. So clearly, the trend is on the downside. FII selling has been on the up. Last four sessions have sold almost 40,000 crores in just four sessions. Of course, DIIs have matched more or less the buying that has happened on the DII front has matched the selling on the FIIs, but somehow FII selling causes a lot of sentimental impact on the markets. Heat map, besides IT stocks, mostly red. SBI gave up. SBI was sticking there for a few days, and I thought that that is a good sort of barometer that market is not going to crack, but to SBI cracked very hard today. So that thesis also got broken. HDFC Bank cracked very hard at 2.4%, Axis Bank 2.7%, Coal India 3.3%. When the market starts to fall, then really, I mean, whether it's a good stock, a good quality stock, great management, all that is set on the side, and the demand supply equation has to first adjust. So if there is more supply, less demand, stocks will continuously go down regardless of who or what they are. Nevertheless, ITC, Bharti Airtel, Mahindra, and Infosys, along with Trent, did try to stabilize the Nifty to a large extent. Nifty Next 50 was not so lucky, where everything was pretty much red except LTIM. Uh, LTIM has actually moved out, so the Nifty Next 50 has not been readjusted by TradingView, it seems. Trent although has gone there. Uh, the uh, LTIM has moved to Nifty Next 50, so this is updated. It had moved out of Nifty, so this is correct. Varun Beverages and DMart, few of the stocks along with Siemens, DLF, IRFC, PFC, REC, all these were clobbered today, more than 5% kind of losses. BHEL down 4%, HAL, Zomato, Indigo, nothing was spared except maybe Divi's Lab and LTIM, the new entrants to the Nifty Next 50. Lodha was up 1.2%, and you had Bosch, which was totally flat. Sectoral, IT only green sector today, 0.7% up. Everything else losing ground. Public sector lost 3% or more, whether it was public sector enterprise stocks or public sector banks. They were the worst performers for the day. Energy, commodities, metals lost more than 2%. Banking lost 1.9%. Private banks also lost 1.8%. Infra lost 1.5%. Real estate, after yesterday's drubbing, total 7.2% for the week, very close to energy and public sector enterprise. And consumption, FMCG, pharma were the least impacted sort of defensives on a bad day like today. The public sector enterprise universe has now reached the election day bottom. This point on almost every chart is the critical point below which some continuous weakness is likely to happen, and we are just about there. So today we have reverted back to February point. So, you have kind of given up 8 months of gain on the public sector enterprise, and this kind of a rounding pattern at the top is not a good sign. It may mean a lot more downside to go. Power Finance, IRFC, SAIL, REC, Oil India, BHEL, Bell, and Indian Oil were the ones leading this sector down. Stock spotlight, Finolex Industries was jumping up despite markets being in the shape that they were in. It looks like the worst is done for this stock and it may head up. To have such a move on a weekday tells you the relative strength in that particular index. Overall, of course, in the last few decades, it has been a sort of a gravy train for Finolex Industries, moving up virtually in one direction in the last 20 years. FII headlines, market meltdown. So Nifty is now down about 6% from the peak. It has happened pretty quickly in 6 sessions. This is normally faster than usually the falls will happen. Small caps have also witnessed a fall and is down similarly versus the Nifty. India VIX is rising rapidly, so it had risen very sharply in beginning of August. If you see, uh, beginning of August we were here, and again the same kind of fall is happening, and the VIX is rising, and it is likely that VIX may rise more. Crude oil is one sort of joker in the pack that we really are not focusing on, but that is impacting um, Indian markets to some extent. From $69, it has very quickly risen to $79, and it seems that this base has been formed near $70, below which it is not going, and above sort of $87, there is likelihood that we may go towards the three-figure mark. So there is more trouble if crude does go this way. We haven't really gone anywhere on crude in the last 2 decades. And with the kind of money printing that has happened, the kind of expansion of balance sheets of the central banks that have happened, I mean, I wonder why crude has remained at the same price with the amount of money in the world going up several folds, 5 6 times perhaps. So sooner or later we will get a rally on oil, and that will ring some alarm bells for the Indian market. uh, FIIs had resorted to buying in September, but it seems that was short lived, and we have now resorted to October. This is only up till 4th of October, but if we add the last couple of days, we have already crossed 40,000 crores. So that is a significant amount of selling, the largest monthly selling, and we are just 7 days into this month, largest monthly selling from the FIIs so far. And of course, the rupee is uh, at its end of the range that it has been sticking to. I think some more FI selling and we will see the break of 84. So this 84 level, which has been really been sacrosanct for a significant period of time, has the potential to create more havoc. FIIs have created havoc in October. We have DIIs which have been supporting the moves, but somehow DII buying is not encouraging that same kind of confidence that FII selling is taking away. Uh, Last couple of instances where DII is absorbed FII selling pressure near 25,000 crores, that was in January of this year, where Nifty remained flat during that period, and in May when FII sold 25,000 crores and Nifty had remained flat in that period. So maybe if DIIs were to sort of press on the accelerator, maybe this month can be a similar one if we are lucky. But so far, what it seems is that all these pressures of the results, the politics, the global geopolitical conflict that is happening, all that is having a toll on the investor's mind, and there perhaps is some taking off the pedal in terms of the FII investor for sure. The the period of October so far um, is down about 4% within the month itself, and we are likely to have some maybe there it will be a rate cut or some kind of you can say institutional involvement of domestic. Maybe LIC will be forced to be pressed to buy more or something like that, because very soon these will start to become headlines. So of course we've discussed all these factors in terms of what could be or what could not be, but my own, I mean, if I were to sort of speculate, I think the main reason for the fall is the election expectation, and the fact that the current dispensation will be removed, and that is causing a longer term shift, that the politics may not remain as stable as we were thinking. Remember, at election in June also, the volatility was due to the expectation that it will become very unstable, and to some extent that flavor is coming back. Of course there are all these other reasons if one wanted to ascribe to, but I would like to know what you think. I mean, why you think markets may continue to go down, or why you think markets may recover, and what FIIs will do. Every opinion is a valuable opinion. My own sense is that we needed some rest for some while, but nobody was able to pick a point that markets will take a rest at this point. Maybe this is that rest quarter that we uh, get, and maybe this is what we also need in terms of some consolidation in the market, given the fact that we've come one way in the last 18 months. Some consolidation, some range bound movement, or some sell off is not such a bad deal, I would say. So thank you so much for watching these videos, and please do like and share this channel with your friends and family, and do write in your comments what you think is likely to happen, maybe what you think is right. Thanks. Bye.